Hi, good morning, everyone. Let us look at today's Nifty and Bank Nifty levels quickly. So yesterday we were keeping this, we were closely monitoring this inside candle low or high to be taken out. But now we will be no more considering this inside bar candles because there is some confusion in the index. If you see, this was the mother candle and 2 days it has formed the inside candles and the next day it has broken low, which gives some clue like the market is going to be on a negative side for some time. But if you look the same thing on Bank Nifty, this green candle is the mother candle. For 3 days there were inside candles, and next yesterday we saw some whipsaw on the upside, which means one index has been taken down, broken on the lower side, whereas the other index is breaking on the upside. So we'll simply ignore these levels. We don't have to trade in such confusion levels. Rather, we look for some other opportunities. So we'll be no more considering these inside candles for now. And let us look for intraday levels. So yesterday was a very nice day for intraday traders. It gave so many good opportunities. I'll just show you like how it was yesterday and how we took trades yesterday. So that will give you some idea how to trade going forward. So we mark this as our demand area, and we also mark this high, and we connected all the bottoms and we marked some trend line. Yeah, this is how we marked yesterday. And we thought this demand zone will work only if the price go above this level and come back to this demand area. But what happened? It didn't break this level. And in fact, it came back directly to this demand zone, breaking the trend line with a big red candle, which gives a nice bearish view. So you should have entered put over here. In case if you have missed entering put, if you see it retested the same level, wherever the demand has been broken, it came back, it went back exactly, retested that level. From there again it faced the same support, has turned into resistance, and it started falling from there. This was a nice intraday opportunity for intraday traders. This was for yesterday, and let us see what are the levels today. Today I don't see any nearby demand or supply level. One demand which I can't see is the demand zone is around 18,367, and just 20 points above we can maintain, 20-25 points stop loss we can maintain if market gives us chance around this supply zone, which is very far away. I am not sure if we get opportunity in the intraday. That is almost more than 300 points away from the current market. In the same way, on the bottom side, oh, we also marked this level yesterday for intraday. Even this one also worked very well. So we marked this 15 minutes level to go long when it comes here. If one have entered long here, should have got good return. So it respected very well. You got a nice return. You got almost more than 1:3, I believe. So this is your entry, your stop loss right below this zone, and look at the way it went. So wherever it made the swing high low before, you can mark your trade over there. It is almost 1:2 trade. So the demand which we marked yesterday on the lower level, it worked very well. And even the trend line has given one opportunity to trade in Nifty. So there were like couple of opportunities in both Nifty and Bank Nifty yesterday during the day. Yeah. So for today, there are no nearby levels on Nifty and Bank Nifty on 15 minutes. But for quick scalpers, there are nice levels on 5 minutes. So this is the 5 minutes Nifty chart. There are two levels. One at around 18,115, the other one around 18,154. So let me explain how to trade when there are level below level. What you do, if you want to trade on the first level, wait for the market go touch this level, and when you see one small red candle closed out of this zone, then you can take entry. That is called type 3 entry, which is confirmation entry. So you are waiting for the confirmation for the prices to react from the demand zone. Once you see reaction, then you enter the trade. Or the best way to enter is in the middle of, in between both the zones. When the price reach in between the both zones, there you can enter the trade. Because if you wait for the second level, there is a chance the price may return from the first zone, or it may come in between both the zones and it can return back. So the best thing is, if you want to take trade from the first one, wait for the red candle to come out of this zone, then you enter the trade. If you want to uh, the other way is like, if that didn't happen, then you can enter trade in between both the zones. That is how you need to trade. And during the day, see like how the price reach this area. Like if you see small high and again any fall, something like that, you can mark a trend line connecting all the highs. Wait for the price to cross the trend line, then you can enter long for some intraday trades. Okay. So those are the nearby supply, and I don't see any nearby demand areas for this. So demand areas are a bit far away. So anyways, as of now, SGX Nifty is also showing somewhere 50-60 points gap ups. Probably we'll look to short when it reach the above areas. Now let us look on Bank Nifty real quickly. So on daily, we already looked about this inside candles. So now we are no more considering these inside candles for trading. Now let us see what happened to the levels which we marked yesterday. This will be good learning for everyone to find out the fake breakouts. So we connected all the lows yesterday like this, and we also connected the highs. So we thought we marked one demand area here. See, we thought to go long in this demand area if we see a breakout here. In Nifty, the breakout didn't happen. It straight came into the demand zone. That too, it has broken the trend line. So it was very clear one can go for the put. Bank Nifty is a bit confusing because it gave the breakout. But if you see, this is a false breakout. How you can find out false breakout? Whenever you see any candle breaking out, wait for the next candle to take out that high. That will confirm the strength in the market. If you see, this is a clear false breakout. This candle has given a breakout. The very next candle, without taking out that high, it came all the way down. So even if one has entered here, you can see the trend line has been broken. All price action traders would have entered trade over here on put side. Even if you, by any chance, if you don't know how the false breakout looks like, and if you enter the trade here in this demand area, the moment it taken out that level, you can simply close your call, book small loss in the call. And even myself, I entered call here after looking at this green candle. And when it started coming out, we booked small loss over there in the call, and immediately we entered in the put. So normally whenever it breaks the demand zone, we don't enter in the put, but here it also taken out the trend line. So that is double confirmation to go for the put, and it gave us nice drop in price to make some money on puts. See, when the demand has been broken, that same demand, whatever used to be as a support to the market, that turns as a resistance. Now the demand didn't work. Now if you see, the price came all the way down. While it is going back, the same support has become the resistance. It started falling from there. So I just explained this little bit so that you will get some idea, like, how to mark trend lines, how to trade along with the trend. And coming to today levels, so these are the 15 minutes level. I'm zooming it out as someone has complained that you are unable to see the levels properly. So the first demand zone is around 42,700. This is going to be around 80 to 100 points stop loss. Once price reach this demand area, you can enter the trade. Here also we are seeing level below level, but the second level is bit far away, almost 350 points away from the first level. So we can definitely enter here. If it go below this, we can take the stop loss. And if we get opportunity, we can try to long around 42,350 area. And coming to supply, see, I won't be considering this supply. It may work again because it came very much close to the supply and it has started coming down from there. from around 43,200 levels. But now we won't be considering this because we don't consider this as a fresh level. Instead, what we do, we go for the small 5 minutes levels. So on 5 minutes level, if you see price reaching 43,210, this is where you can look for shorting and with small 40-50 point stop loss. In case if you see any big reversal in the market, you can also consider this level. This may work very well around 43,500, which is also again almost 500 points away from the market. So for now, these two will be the supply. And when it comes to demand, even demands, we have level below levels, one around 42,750 and the other one around 42,600. The demands are very close on 5 minutes. So if you want to take trade on the first level, wait for the green candle to close above the zone, then you can look for long. Or you can, if you get opportunity, you can enter in between both the zones. So that's all for the day. I'll keep you posted with other levels during in our group during the day. Thank you for watching.